Robinhood snacks for January 11. Let's see what's happening. So they're gonna be talking about Microsoft's ChatGPT. I don't know if you guys have tried this yet, but that thing is ridiculously good. Like some of the stuff you ask it, it's like, dang, the internet has upgraded. So what happened? So everything looks green. So it says, "Hey snackers, new thing to add to your LinkedIn failure resumes. Venture capital firms are showcasing their biggest portfolio L's, like passing on Facebook and Google in the early days. Womp." U.S. stocks rose yesterday despite hawkish comments from Fed Chair Powell that suggested interest rates could stay higher for a while. Meanwhile, investors hope that tomorrow's December consumer price report will show inflation continuing to cool. You guys, the Fed keeps saying this stuff. I think they mean it, and they just see the stock market rally, so they have to tell us this. But I don't think interest rates are going to get cut anytime soon, until we see a meaningful decline in inflation, right? If it's going down 0.1 every month, like, we got a long way to go, right? So what are they saying about Microsoft's ChatGPT? So Microsoft's reportedly in talks to invest $10 billion in OpenAI. It's all about the ChatGPT edge. Microsoft Word meets artificial intelligence. We've come a long way since Clippy. Microsoft's Office Assistant used to be a cartoon paperclip. And you know what, you guys? I remember this. Those were interesting days, and that no longer exists. Now it could be a sophisticated AI brain. Microsoft has been in talks to invest $10 billion in OpenAI. Semaphore reported OpenAI is a company behind Gen AI tools like ChatGPT and DALL-E, which generate articles and images from text prompts. Excelling. ChatGPT went viral upon its release in November. OpenAI said 1 million people signed up to test the chatbot in the first 5 days. That's crazy, 1 million people. PowerPoint, Microsoft would reportedly get to keep 75% of OpenAI's profit until it recoups its investment. After that, it would own a 49% stake in the company. And when you think about this is actually very smart. If you're a Microsoft investor and you see potential in OpenAI, I think this is good because they are concerned about getting their investment back, right? And then they still get to keep 50%, right? Which would be crazy. I mean, that's good. That's good for Microsoft, That's income coming in. So the outlook is the funding would value OpenAI at $29 billion, up from $20 billion in October. Of course, since we saw the product and we saw how good it is, of course it went up in value, right? This is normal. The deal could fall apart though. Why? But it's apparently targeted to close by year end. Microsoft invested $1 billion in OpenAI in 2019, and also sells the cloud infrastructure that the tech runs on. According to founder Sam Altman, OpenAI spends a few cents in computing power each time someone uses ChatGPT. That goes straight into Microsoft's pockets. By deepening its involvement with OpenAI's tech, Microsoft would gain an edge over cloud titans like Amazon and Google. Also, search. Microsoft could incorporate ChatGPT's chatbot or DALL-E's image generator into its search engine, Bing, to better compete with Google. And look, you guys, I'm not gonna lie, Google's search engine, it's the best. I love it. I used it when I was going to college. I still use it to today. And I don't see myself changing to Bing. Bing sucks, you guys. I've tried using Bing because I remember they used to give you money to use it when I was younger and I needed cash, right? That thing sucked. It sucked. Bing could use ChatGPT big time. If they could get ChatGPT integrated into Bing, that would be the greatest thing in the world for them, because right now Bing sucks. Nobody uses Bing. I've never met a single person who has said they use Bing. Never. Not even joking around. So if ChatGPT could get integrated into Bing, that would be a game changer for Microsoft. And again, if you're an investor in Microsoft and you think this is going to change the tide for Microsoft, it's a good idea to be dollar cost averaging into the stock. Again, not financial advice, because it could always go to zero. But if this thing works out, I could see it benefiting Microsoft in a huge way. Imagine if 10 years from now, 5 years from now, everyone is using Bing because it has GPT in it. That's a game changer, right? And again, you always have to be a forward thinker. in the stock market. And you have to believe in your gut, right? If your gut tells you that this is what's going to happen, you got to invest, because people are always going to bring you down until it's not going anywhere. And, you got to be, it's at the end of the day, it's your money. So, Office. Microsoft could also include OpenAI's tech in programs like Word and Outlook, using ChatGPT to help you write emails. Can you guys imagine, how big of a game changer is this? Because everyone uses Word. Everyone uses Outlook, PowerPoint. Guys, I see huge possibilities, and I can't wait to see how they do it, So the takeaway here is acquire relationships early. Right now, OpenAI is still free to the public, though it charges developers for licenses. But one day, it could disrupt Google's search dominance and rake in billions. Microsoft got in early to build a dependent relationship, and it could reap the benefits. Still, OpenAI has fierce competition, and its commercial success is far from guaranteed. And again, I know I make it sound like you guys should invest in this, and this is the greatest thing ever. But this last sentence, really nails the nail on the coffin, because if Google creates their own chat GPT and it's better than Microsoft's, then, I know we all know Google's going to dominate, right? But we have to see if another company, it doesn't even have to be Google, somebody else could create one better than chat GPT and compete against Microsoft. But again, Microsoft is in early, and they're working their hardest to make sure this works out. So, what's going on in Coinbase? Coinbase lays off 20% of its employees as another wave of contingent hits the crypto industry. Under the weather, U.S. crypto exchange Coinbase said it laid off 950 people, and in his announcement, CEO Brian Armstrong called up unscrupulous actors in crypto, in apparent reference to SBF, and mentioned last year's struggling macroeconomy. It is in the exchange's first big cut. Cost cutting as crypto winter set in and trading volume dried up. Coinbase shed 1,000 employees in June and 60 in November. Cost pumping. Last week, Coinbase was hit with a $50 million fine from New York regulators and agreed to spend another $50 million on its compliance programs. Crypto's cold season. Coinbase isn't the only one. Sick with crypto contagion last year, the industry shed 26,000 roles. Most recently, big players stumbled after FTX's November implosion. Crypto lender Genesis laid off 30% of staff this month in its second round of cuts and is now set to be considering bankruptcy. Bankruptcy, oh shoot. That's terrible. You guys, what's happening with crypto? It is what the government wanted. I don't want to say this, but this is exactly what the government wanted, because now everybody's running back to them. And they're putting their money in these savings accounts that give you 3% yields, you guys. Like SoFi, I got links down below. They're giving 3.75 for their savings. This is exactly what the Fed wanted, you guys. It's kind of funny, but I bet you guys in the back of their room, they're happy. They're happy that crypto fell apart. But FYI, it also reportedly owes $900 million to customers of crypto exchange Gemini. Meanwhile, crypto mega bank Silvergate cut 40% of its workers last week following an $8 billion bank run. And this always happens, you guys. I ran also. I took out my money as soon as all this stuff was happening. I went and I withdrew. I withdrew because these companies were going under. I saw one, then I saw the second one. And I almost didn't pull out of Genesis on time and BlockFi. But as soon as I saw what was going on, you guys, I am so lucky I put out some of my cash, or else I would be pissed. I know a lot of people lost money, and I feel for you guys. I really hope you guys get something back. But the takeaway is that contagion comes in waves. When a big fish like FTA sinks, it can send ripples across the crypto pond. Those ripples aren't necessarily all felt at once, because it can take a while for the other big fish to get hit by the wake. Coinbase's Armstrong said there might be more contagion coming, but contagion waves could ultimately leave the overall industry stronger or more centralized by watching out crypto's weaker players. And this is actually true. If they make it, crypto is able to make it through crypto winter, then it can definitely show off that it's here to stay. But it's all going to depend. I think FTX really was that nail, and I'm going to use this reference again, the nail in the coffin to finish crypto. It was already on a huge downtrend, but I don't know if we're going to see trading volume the way it was during the pandemic that everybody was locked up. I just don't see it happening. People were locked up, you guys. Everybody was locked up. There was nothing to do. So you know, what else are we snacking on? So, Meta says it's banning gender targeted ads for teens on Instagram and Facebook as part of its broader effort to tighten policies after backlash over ads' effects on young users' mental health. You know, you guys, ads are everywhere. Yeah, right now they're targeting Facebook, but ads are everywhere. And I mean, I guess I have to see the behind the scenes to see what they're using to target people, right? But sucks for Meta. It sucks for Meta. You know, Meta, they make a lot of money from that. But Prime, this month, Amazon says it will widely roll out Buy with Prime, a feature that allows e-commerce merchants outside Amazon to use its payment and delivery services. Think paying with Prime on your favorite shoe site. That's going to be interesting. Bag. The grocery force is still strong. Safeway owner Albertson, which agreed to sell itself to Kroger, notched another hearty quarter with sales up 8.5% as consumers snapped up inflated food items. And, you know, you guys, if you've gone to the store recently, eggs are ridiculous. You know, we used to have inflation for products like, what was it, like fridges, washers, dryers, all these appliances. Now that's gone. Now it's moving over to the food section, right? And this really sucks, you know. I think the economy has gotten bad, that people are no longer eating out. And now people are eating at home more. If everybody starts to buy more things at the store, what happens? Things go up in price, right? They weren't expecting 300 people to want lettuces if normally only 220 people want lettuces. So that's what I think. You know, I went to Trader Joe's the other day, packed. Like, I was like, really? You guys are all cooking? But Coinbase, a man was sentenced to prison in what is believed to be crypto's first insider trading case. Prosecutors said he profited from tips from his brother, who worked at Coinbase, about what coins the exchange planned to list. And you know, you guys, I guarantee you guys, this happens more often than we hear about. This is one person, but how many people work at Coinbase? How many people have access to his knowledge, you know? This is what always sucks, that, you know, I guess at the end of the day, it's who you know, right? But RTO, Disney CEO Bob Iger cracked down on WFH, telling workers to be in the office 4 days a week. Hybrid work appears to be here to stay, with office occupancy still well below pre-pandemic levels. And you know, you guys, I don't know what's going to happen since I've never experienced working from home. But I can't imagine companies are too happy about it. You know, I think companies like seeing their employees at work because you get to know who's working for you, who messed up, who's doing good. But we'll see how it ends up working. So the snack fact of the day: climate disaster in the U.S. racked up $165 billion in damages last year. So earnings are expected from KB Homes and Shaw Communications this week. But this is what's happening, you guys. It's really interesting. Coinbase is laying people off, and Microsoft is trying to become the next Google search engine. But we'll see how it works out for them. You guys know, like, subscribe if you like this. I like to read the news to you guys every single day. And I'll see you guys in the next one.